Last year, the IRS fired 28,000 employees. Now it's in full-blown panic trying to hire thousands of people back as fast as humanly possible. Today, I want to let you know exactly why this is the case and what that means for your tax return in your wallet. Without further ado, let's dive in. What you're about to hear isn't a rumor or a political opinion. It comes straight from an internal government memo that was never meant to go public. And what it reveals is a massive contradiction between what the government has been telling Americans and what's actually happening behind the scenes. Let's start from the beginning, because if you haven't been following this story, you need some context. Back in 2025, the IRS underwent one of the most dramatic staffing cuts in its history. Under the Trump's administration's push to shrink the size of the federal government, the IRS shed approximately 28,000 employees. Guys, that's not a small number. That is roughly 27% of the agency's entire workforce in a single year. Now, here's where things get even more interesting. While all of this was happening, the people in charge were telling a very different story to the American public and to Congress. Treasury Secretary Scott Bessent called concerns about the IRS's staffing cuts a complete fallacy during testimony to Congress earlier this month. Frank Bisignano, which I don't know if I said that name correctly, who serves as the IRS's CEO, backed that up. He told lawmakers that anyone saying the IRS was going to fail because of these cuts was just a pundit who didn't know what they were talking about. He even said, and this is a direct quote from March, "I feel good about the number of employees I have right now." So the public message was clear. The cuts were fine, the agency was fine, and anyone claiming otherwise was spreading fear of misinformation. But here's the thing about government agencies, as I'm sure you know, they always write internal memos, and internal memos don't lie. Here's what a leaked memo actually said that I want you to know. An internal memo obtained by the news outlet Notice, N-O-T-U-S, tells a completely different story. In late February 2026, while officials were publicly saying everything was under control, the IRS's own top human resource official, a man named Alex Koweskin, was writing an urgent memo to the Treasury Department. In that memo, Koweskin stated plainly that the agency had seen massive cuts to its staff in 2025 and that ongoing staffing shortages put the 2026 filing season at risk. The memo went further. Koweskin noticed that processing tax returns, handling balance due notices, dealing with delinquent returns, and responding to correspondence from taxpayers and tax professionals was an ongoing issue. So in other words, there is a backlog, people's paperwork is starting to pile up, and there aren't enough hands to deal with it. So what did the IRS do? It went to the government and asked for emergency help. The emergency hiring push happened. The IRS requested and was granted special authority to hire 8,000 new employees on an expedited basis. Normally, when the federal government hires someone, it's a long, slow process. There are background checks, scoring systems, veteran preferences to consider, and a full review of every single applicant. It can take months. But the IRS got permission to skip all of that. The government has a special authority it can grant agencies when there's a, quote, critical hiring need or severe shortage of candidates. The IRS qualified, and now it's racing to fill those 8,000 seats before the next tax season begins. This approval runs through September, but the memo noted that the need would likely continue beyond that point at a minimum. So this isn't a quick fix. This is the IRS having a structural staffing problem that isn't going away anytime soon. So who got cut and who they're hiring now? Here's another important detail. The cuts didn't hit the IRS evenly. The hardest hit division was called Taxpayer Services, which is exactly what it sounds like. It's the part of the IRS that helps regular people, customer service representatives, people who process your refunds, people who answer your calls when something goes wrong. That division alone lost 9,000 employees in 2025, about 21% of its workforce. And now the IRS is hiring clerks, tax examiners, accounting technicians, tax specialists, and contact representatives. Basically, they're trying to rebuild the exact workforce they just dismantled. Go figure. Here's the painful irony. The Biden administration had spent years and billions of dollars from the Inflation Reduction Act building up that very same workforce. Congress later clawed back a lot of that funding, and the Trump administration reversed all of those hiring gains. Now, just months later, the IRS is scrambling to hire back the same type of workers. So why does this matter to you? You should care about this. Maybe you file your taxes every single year, you get your tax refund, you never think about the IRS again. What does any of this have to do with your life? More than you might think, actually. You see, the old commissioner, Danny Werfel, who led the IRS under President Biden, said the effects of IRS staffing reductions are often invisible to taxpayers until they need help. And that's the key phrase, until they need help. You see, if your tax return gets flagged for review, you need trained people to look at it. If your refund is delayed for some reason, you want someone who who knows what they're doing to investigate it. The IRS sends you a letter saying you owe money and you disagree. You need a human being on the other end of that phone call who knows what they're doing. When there aren't enough of those people, everything slows down. This means longer wait times, greater uncertainty, and delayed resolution of stressful tax matters. I know what you might be thinking. I'd rather have an unqualified tax professional or IRS agent. No, you don't. You want stuff to happen fast. And for a lot of Americans, a delayed refund isn't just inconvenient, it's financial problems. Millions of people count on that money to pay bills, cover rent, or deal with expenses that have been piling up. And if the IRS is backlogged and understaffed, yeah, those refunds don't come on time. And the situation is being made even more complicated by one more factor. The tax code just underwent a massive change. At the exact same moment that the IRS is dealing with a skeleton crew, Congress passed something called One Big Beautiful Bill Act last year in 2025. That law made over 100 changes to the US tax code, part of which you can find some of those changes in this video right here. This requires an already depleted workforce to learn and implement all of them. This means that people still working at the IRS, many of them are already stretched thin, many of them have been assigned to tasks outside of their normal expertise, now have to go navigate a dramatically written set of rules. They have to start from zero. And the people being hired to replace the fired workers, yeah, they're completely brand new. They have no experience. They're going to need training. They're going to need to read and study from past court cases. Training takes time the agency doesn't really have. So can they even find enough people? Here's one more wrinkle worth paying attention to. The IRS might actually struggle to find people who want these jobs. One former senior IRS official who recently left the agency pointed out that even better times when the government tried to hire frontline workers for these kinds of entry-level positions, it was competing with major companies like Amazon. Why would you say that? Well, Amazon, which can often offer better pay, more stability, and less bureaucratic uncertainty, could be a good job for someone who has accounting experience. Now, imagine trying to recruit people into the federal government at a time when tens of thousands of federal workers have just been laid off and when there's a widespread uncertainty about job security, staffing, audit rates, and keeping your risk low. Yeah, a major question on every taxpayer mind is how these massive personnel fluctuations impact the likelihood of being audited. And historically, the IRS enforcement capacity has been directly tied to its head count. According to official IRS data book statistics, the depletion of agency resources caused the overall individual audit rate to plummet to 0.9%, down to just 0.2% in recent years. This downward trend continued in the agency's latest reports, which revealed that the IRS closed approximately 8,000 fewer audits in 2025 compared to 2024, as the agency shed roughly 27% of its total workforce. However, to compensate for fewer field audits, the agency increasingly relies on automated compliance. And in fact, automated correspondence audits conducted entirely mail now make up roughly 75% to 85% of all individual reviews. With the IRS now scrambling to hire 8,000 workers to implement over 100 retroactive tax code changes under the One Big Beautiful Bill Act, keeping your audit risk low is more vital than ever. To protect your wallet, remember these 3 tips. Number 1, report all income uniquely matched by the IRS. Ensure every W-2, 1099, and K-1 matches your tax return exactly. The IRS relies heavily on automated, underreported systems to auto-flag discrepancies. Number 2, keep impeccable records for Schedule C deductions. If you're a business owner with a sole proprietorship, please maintain digital receipts and separate bank accounts. Avoid rounding numbers on your deductions, as perfect whole numbers often trigger automated reviews. And number 3, work with a certified professional. You see, with the tax code undergoing massive sudden rewrites, relying on software alone can leave you exposed. A professional ensures your filing is strictly adhering to the newest compliance guidelines. So whether you're a W-2 employee or a small business owner or even a real estate investor staying ahead of tax policy, staying ahead of tax policy and IRS updates is critical for long-term wealth preservation. All right, guys, here's where we get to the end. So to wrap this up, the government reduced the IRS workforce by about 28,000 people. It dramatically reduced its enforcement capacity. This is good news for anyone who fears getting audited by the government. However, it also reduced the IRS's ability to process refunds quickly, answer your questions, and generate function with efficiency. So this can be extremely irritating for anyone who has to deal with the IRS on a regular basis right now. We will see what happens next, and in the meantime, the smartest move you can make is just to get your own household in order. File your returns correctly, make sure you're taking every legal deduction available to you, and get yourself educated on tax strategy. That's all I got for today's video. As always, don't forget to like, comment, and subscribe, and turn on the notification bell so you never miss a new video. Make sure you also pick up our new copy, The Art of Legal Tax Avoidance Volume 1. If you want to learn how to get loans and grants from the government to help you fund your next business, watch this video right here. I'll see you on the next video. Thank you so much. Cheers.